check, the dollar dropped to a 16-month low today as a rally in stocks dampened demand for the safe haven, perceived safe haven, that is, of the dollar. Nick Bennenbroek is head of currency strategy at Wells Fargo Bank. His team ranked at the top of the Bloomberg Best Overall Currency Forecasters list for the first quarter. And Nick is here now to talk about what's happening with the dollar today and what may happen with the dollar going forward. I do want to talk about today, first of all, because the move that we're seeing is a pretty dramatic one in the dollar. Is it that folks are getting back into risk assets like stocks and getting away from the dollar today, or is there more to it than that?
Well, I think that's certainly part of it, and today we're seeing Australian dollar, for example, at new highs, and you mentioned the Mexican peso also doing very well. So there is that risk on, or looking for those high-yielding assets. But beyond that, we're dealing with a couple of issues right now. One is the very benign interest rate policy, the Federal Reserve seemingly overall comfortable with rates at these low levels, and we've got this temporary issue as well of fiscal policy or budget policy being discussed here in the United States, and also looking at this debt ceiling increase as well. So there's a couple of factors which, in addition to the market mood, are weighing on the dollar as well.
And when you look at the dollar versus the euro specifically, it's been, I think for some folks, a bit of a surprise move this year, because you do still have a lot of the European debt concerns out there, and yet the euro has fared well because you got the ECB on the other hand.
I think that's a fair point, and as we say, the weak US dollar story is a very familiar story, and perhaps well-founded in some cases because of that interest rate policy, but doesn't necessarily, I think, mean that the US dollar has to be weak against every single currency. And in the case of the euro, certainly in the last few days, we've definitely seen more headlines surrounding the European debt crisis, particularly with the Finnish elections, and then now the taboo subject of Greek restructuring. Certainly no one's talking about it or saying that it's going to happen, but at least the words are being mentioned and it's being floated by some individuals. So, I think that while we could argue that the bad news is priced into the dollar, I don't think the bad news is priced into the euro at this point in any way, shape or form.
Continue our look at the currency markets with Nick Bennenbroek, head of FX strategy at Wells Fargo Bank and a Bloomberg Best. Nick, we've been talking about the dollar versus the euro specifically. Obviously, the dollar's been on a downward trajectory. But let's get back to some of the more recent issues over in the European Union. The Finnish issue that you mentioned, which is that there's been an election in Finland, and the new leadership seems to not favor bailouts. You have concerns about a Greek default or Greek restructuring. Is the euro going to be able to continue to go up in the face of these types of challenges?
Well, that's the question, and that's why, for example, we're not looking for a higher euro. We're looking for a lower euro over time, and perhaps even in the very short term. And in the case of Finland, for example, the second and third place parties are somewhat resistant to further assistance or further bailouts, and that's just going to complicate the entire process. And what's been really interesting the last couple of days, for example, is that if you looked earlier in the year, we still had these smaller countries, Ireland, Portugal, and Greece, the bond yields were going up, whereas Spain and Italy, the bond yields were going down, and that led to some encouragement, some hope that this contagion...
That there wouldn't be contagion.
The crisis would be contained,
right.
And what we're seeing with the very latest headlines is now all of these bond yields are actually starting to move together, and we've seen Spain moving up together.
Right.
And so I think now far less confidence that perhaps it can be contained, or that it's over at least, put it that way. And I think the market's been too heavily discounting the fact that all of these debt issues won't really be a problem. And so while we understand the euro should be higher perhaps on these interest rate expectations, the ECB, we do feel the market's far too heavily discounting the whole European debt situation, and that's why there's this downside risk.
But what about when you look at sort of relative strength of U.S. and Europe? Because it does seem like that the interest rate increase expectations here in the U.S. just keep getting pushed further and further back. So how much is the dollar going to be able to strengthen significantly given that interest rate imbalance?
Well, that's part of the equation, and we do need the trigger in terms of higher US interest rates to see a sustained dollar gain, and so I think we need to get to June, the end of quantitative easing. We might not see interest rate increases until perhaps 2012, but in this June to December period, certainly the discussion, the expectations, the thought of higher interest rates could ramp up at that particular point in time. And so I think there's a good chance the dollar will be starting to move stronger over the second half of the year, and then at that point we'll be seeing the euro go down as well.
And just very quickly, in 10 seconds, you don't think we'll get another round of QE?
I don't think so. It looks like the risk of deflation is largely diminished, so I don't think we'll see another QE.
All right, Nick Bennenbroek, thanks so much for coming in, head of FX strategy over at Wells Fargo.